Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always with the University of Missouri's Ben Brown. Good morning, Ben.
Hi, Will. Did you have a good Labor Day?
I did. It was a very interesting one. Had some wedding festivities, a bachelor party. So went out to Kansas City for that, and then came back. And I believe you've been traveling as well.
Yeah, a little bit. We had my neighbor Derek's 42nd birthday yesterday, so the whole neighborhood got together for that. So it was a nice way to end, the weekend.
Very nice, very nice. Well, we're flipping the calendar into September for this episode, and we've got some adjustments on prices and looking at some different contracts here. So let me give a quick rundown of where we sit coming into this week. So December 23 corn is down 15 cents at 481. November 23 soybeans down 42 cents at 1363. Soybean oil on the cents per pound basis for the October contract was down 1 cent at 63.97. That is 63.97 cents. Soybean meal by the short ton for October was up 50 cents per ton at $400.20. 23 wheat crop for December down 19 cents at 598. The July 24 wheat crop down 19 cents at 649. And then crude oil for September by the barrel up $4.04 at 83.74. So, Ben, we have a shortened trading week this week, and we're talking about these things here just before the open. What is your mindset coming into this week? What are you thinking the market adjustments might look like for this week?
Sure. So now that we've turned the calendar to September, that probably does psychologically bring the markets back to thinking about harvest pressure. As you know, we've seen some harvest start to roll in the southern part of the plains here in the next week or so. It's going to be moving more up into that corn belt, and that's going to be kind of a tense time. Maybe tense isn't maybe the right word, but it's certainly going to grab market traders' attention because these are those combine yield reports coming off and going across the scales where we start to see, okay, did we have more problems out and amongst these fields than what we initially anticipated from some of that heat? Maybe, lack of precipitation in some parts, causing some thinner soils or some lighter soils to show some heat stress out and amongst the fields and be real spotty. So, I think that's what, as the calendar turns to September and we start to rethink about, harvest here in the United States, certainly I think we'll probably see, maybe a little bit of downward pressure initially, but if we start getting these reports that could start to, find a bottom on the markets.
Well, and I feel like for a lot of these locations, talking about that heat and dryness pressure, we've been getting recent rains, but some of that might be a little bit too late to really boost large portions of the crop, going back to our previous conversations talking about pod fill and soybeans. But you got to imagine at least it'll help add maybe a little bit more of a positive, recency bias into the market potentially.
Yeah, it probably is too late for a good chunk of our crops. There might be some places where soybeans are still, getting those beneficial rains, and not to say that the rains will hurt. Certainly, we can turn the calendar and say here in a month or so we're going to be planting some winter wheat, and certainly that would be appreciative for those crops there. But in general, yes, the crop didn't finish the way we would want it, and that's why I think these harvest reports are going to be, very important. And truthfully, the September USDA report, production report that we have coming up here in about 8 days, that's going to be a big report as well, because USDA actually sends people out into the fields to do field surveys, and that'll kind of give us an indication of how much the heat really tapered yields there at the end.
So, Ben, I'd like to flip into our main topic today as we flip the calendar over into September, which means a new marketing year and hopefully some adjustments on what this marketing year brings from last marketing year. Looking back, we had some issues on the trade front, some low numbers there, and really coming down to it, the U.S. was beat out by a lot of its competitors on a price basis. And then macroeconomic pressures we saw, rising interest rates and other challenges that face the market. So, Ben, looking into this marketing year, what's your wish list as we move forward?
Well, that depends on which side of the state I'm on, right? So if I'm in northern Missouri, I'm hoping for a very strong corn price. If I'm in southern Missouri dealing with cattle producers and poultry producers, I'm hoping for a low price. So I have to temper my reasoning here with that. Okay, so here's I think my bottom line as we think about next year. And these aren't a whole lot different than what I would have said at this time last year. Everything would point that global production should rebound. We were down about 5% on global corn production this year. That included a 9% reduction here in the United States, a very large reduction in the European Union. As a reminder, it was very hot in France and Central Europe, and would expect that production to rebound. On the counter of that, Brazil had just an amazing year of corn production, a record year of corn production. We'd maybe anticipate a little bit pullback this year on maybe some higher acres, but lower yields. But in general, global production rebounds about 5%. Now, that takes us back bushel wise to where we were, in 21, 22, right? So not a blow it out of the water type of situation, but certainly, a rebound in production. The problem I have with that is that still maybe is that's enough demand, right? Or, that's enough supply to meet the demand that we have. And that's where I start to look at the soybean picture. The soybean picture is very tight, especially here in the United States. Globally, there's vegetable oils out there to be had, but the picture, is growing tight. South America is anticipated with their acreage increases to produce 163 million metric ton crop again, maybe pushing 167 million metric tons. But that soybean picture remains tight, and that's going to help the whole complex, I think, find a little bit of a bottom here, plus high input costs, right? Like that's going to help find a new bottom as well, in terms of just overall production. So, my message to producers is those marketing year targets have to be adjusted a little, like we have to look at that, right? We're probably not going back all the way to sub $3 corn in spots, but we're also probably not going to be in that $6 range a whole lot longer either. So,
yeah. Well, but on that, you look at the global picture right now. You talk about that tightness, especially within the soybean market, and potentially some, continued tight carry out coming out of this year, depending on what harvest looks like. And you talked about the struggles there. So you have to imagine that there is potential, maybe longer term throughout next year, for those prices to, I guess, not stay exactly where they are, but still remain relatively strong compared to where we've been in the past, especially going back to the trade war with China looking a few years ago.
Yeah. So recency bias is something that struggles with all of us, right? So, you go back 2 years and we had very strong prices because we were dealing with the drought. It was the first year kind of really of major drought here in the United States. My anticipation is lower prices for the year ahead, and for corn that could be as much as $2 lower year over year, right? We're going to find a footing somewhere around 670 on this current marketing year, 660, 670, meaning last year, the marketing year that just kind of wrapped up. But so maybe $2 lower, $1.80 lower year over year. And part of that is just, we're coming down from high prices, and even though it's still tight, there's not as much demand. We do anticipate production to rebound. So yeah, declining prices.
So, all right, looking here in the very short term, Ben, what should farmers and ranchers be paying attention to this week?
Well, so everything's kind of leading up to the September supply and demand report coming out in about 8 to 10 days. This week, everything is delayed a little bit weak in terms of reports due to the holiday weekend. But what I'm probably most interested in is as we turn into next week, so the week of September 11th, I think that's going to be a big week to kind of really start to get a handle on the crop size for 2023. And once we get past, that week, then we can start thinking about global supply elsewhere.
All right, Ben, it's always a pleasure having your knowledge on the program to really get to pick your brain. Viewers, listeners, if you'd like to learn more about us or what we do, check us out at brownfieldagnews.com. You can also find the weekly livestock market update there as well. Ben, thanks again. I'm Will Robinson on Brownfield.